everything I'm talking about. I'm just gonna run through this very quickly because these are expenses you should be making as license 4650. So these are worksheets that you should be using to focus you in on what's deductible in terms of your own businesses. You cannot, some of you go to your accountants and you make everything up. You have no records. Some of you go to your accountants and you're very detailed as to the information you give them. Some of you have most of your information in order, but you don't have all. This is strictly intended to give you guidance here. If you're relying upon your accountants to ask you the questions as to what your expenses are, you're making a mistake. Because they're never going to ask you all the questions. It's up to you to know what you can deduct and to tell them. And that's what this is designed to do. So this is just, we'll talk about this at the end. And then I gave you, there's a 1031 worksheet, which I'm going to give you. You should keep this, because this is going to kind of focus you in on the numbers, which is going to be one of the first topics we're going to talk about. And then I have just like a summary sheet, which is going to kind of flow where I'm going, the direction I'm going at. And I kind of gave you this so you can make notes if you have questions, so you can focus in on the questions you ask me either now, at the end of this meeting, or if you come to me later and you ask me questions. So the reason I know a lot about 1031 is not just because I'm a qualified intermediary and I deal with it all the time. It's because I kind of grew up in this business, and this has always been a big thing. Even as a young kid, before the IRS issued regulations and made 1031 kind of official, we used to do this on small sales. Now we do them on $70 million sales, $100 million sales, and we do them also on $500,000 sales. Somebody has a rental co-op in Queens that they're renting, and they want to sell it. Can they do a 1031 or $400,000 transaction? Yes. What is the cost to them? The additional cost related to the 1031, in a case like that, is probably $1,500. It's not a lot of money for even a $400,000 transaction. So it used to be cost prohibitive. It's not cost prohibitive anymore. So the first thing is qualified property. What kind of property can you do a 1031 on? And this is where you get into trouble as real estate people. 1031 only applies to property that, in the words that the government uses, is rental. Now they don't say rental, they say trade or business. The trade or business means rental. Or investment. They're two different things. An investment property is a property that you buy and you hold it for appreciation. So there's nothing wrong with buying a lot in Missouri or buying 200 acres in Missouri with the expectation it's going to go up in value. There's no rental income, there's no farming activity, nothing's going on with it. Can you do a 1031 on that property? Yes.
Yes.
Can you do a 1031 exchange on a property in Florida, beautiful condo that's on the water, if you bought it strictly for investment, for appreciation? 100% yes. Will they believe you? 100% no. They're not going to believe it. They're going to say, you're using this condo, either you're using it, your relatives are using it, this is not property you bought for appreciation, this is a second home or a third home that you bought for personal use. We don't care what you tell us, we don't believe you. And you can fight, you can appeal it, you will lose 100% of the time. If it's a condo in Florida and it's rented, different story. You're reporting rental income, it's a real rental operation. And there are plenty of people that have condos in Florida that they rent. They Airbnb them. Sometimes they use them for personal use for like a month. The IRS doesn't really care if you use it for a month. But if it's not truly a rental property, it does not qualify for 1031, right? They don't believe that you bought 600 acres in Missouri to go pitch a tent, right? So it's not personal use. But you have to be kind of careful as to what you consider personal use. Once COVID hit, there was a lot of purchases made in Eastern Long Island, both in the Hamptons and on the North Fork. A lot of people bought second homes out there when COVID hit. They know that people are not renting these homes. They know that people are using them as second homes. So we have the same problem now out east in the Hamptons and on the North Fork that we have in Florida. They just don't believe that they're rental properties. The other thing that you might find interesting is audit work. When's the last time anybody here, well, let me ask this. In the last 5 years, has anybody here been audited? And it doesn't mean a negative thing. You were audited.
Go ahead.
So, of the last 40,000 tax returns that we filed, we've had 5 audits. That's pretty much zero, right?
Yeah.
Right? Mm-hmm. Unfortunately for you guys, all 5 were self-employed people. They were all self-employed. Some of them were civil returns, some of them are bad returns, but they're all self-employed. The IRS, so you know, does not audit 1031 transactions in this area. We have what we call the Andover Service Center in Massachusetts. They never had an agenda to audit 1031, ever. And they certainly don't audit now. There are just no audits. I haven't seen an audit, and I get a lot of audit work from other people that do tax returns, and people get audited, and they come to me for representation on an audit. And I've said this to you many times, when somebody comes to me when they file a tax return and they have an audit, and they come to me and they go, Joe did my tax return, I got audited, and I look at the tax return. 95% of the time I tell them, you don't need a tax attorney, you need a magician. Don't even show up. Because if you show up and try to defend this tax return, they're gonna get you, just not for this year, they're gonna get you for the year before, they're gonna get you for the year after. If you don't show up, they're probably gonna make an assessment against this year, whatever it is, whether it's $5,000, $100,000, $500,000, $1 million,
Right.
deal with it.
Yep.
Because if you show up, they're gonna throw the book at you. That happens most of the time. So most of the audits are because the returns are very, very bad. But having said that, I do want you to know that New York State audits 1031 transactions all the time. All the time. I have pending audits. Maybe it's because my work as a qualified intermediary, and I see it, but they audit all the time. New York State does not like when you sell property in New York and don't pay taxes, and then you buy property out of state like Florida. So if you sell in New York and you go to a non-taxable jurisdiction where there are no taxes, and there's a lot of them around the country. Florida's the big one, but there's also Tennessee, there's Nevada, there's Washington State, but Tennessee and Florida are the big ones on the East Coast. There's a very good chance that if your sale is $2 million or more, that New York State's going to question it. The good thing is they don't look at the rest of the return. They just focus in on the 1031. And typically, most of these 1031s are legit. But if you're selling a piece of property in New York and you're telling them you're buying a condo in Florida, you watch out. They don't like it. And they're very, very good at knowing that whether you're using it, not using it. I've told you guys many times, they subpoena cell phone records, they get your credit card records. New York State is very good at data, very good at analytics. They know where you are every single day of the year. You can't fool them. They get your credit card records, they get your EasyPass records, they get your cell phone records, they know where you're answering your phones, they know where you're originating phone calls. So if you have an audit risk, you just have to be very mindful. New York State's going to pick it up. All right, so again, 1031 transactions are for rental properties or property holding for appreciation, and it's the same thing for the purchase. It has to be a rental property or a property that you're buying for appreciation. Then we have the money requirements. This is the big question I get all the time. Like, what do I have to do? So I kind of lay it out on this worksheet. And for those of you who know that have brought me clients, I pull out this worksheet right away, and I go through the numbers with you as a broker.